Welcome back. I'm Pratap here. Today is 30 August 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab post, and here you have a post about our free training program, and this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. So far we have released 24 training videos. From these 24 training lessons, we have 63 training videos. So you need to access from the first lesson. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also placed a link to our Telegram channel in this YouTube video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will provide at our Telegram channel. Now let's get into the analysis of the high liquidity zones generated in our yesterday's end of the day report. So we have identified 4 high liquidity zones from the list from the daily time frame and 75 minutes time frame. And a couple of trades we got today. The first one is from LTF. LTF we have 2 trades. One is a stopped out trade and another one is a successful trade. Mostly the stopped out trade you might not have executed because that happened in the morning 9:15 candle, but still for the statistics point of view, I need to consider that as a stopped out trade. But for you, mostly your trade might not have been executed, but the trade that is successful, definitely it might have executed for you. But even before that, how we fine tune, let me explain. This is a 75 minutes high liquidity zone. So here you have a rally candle with a hidden body, and then you have 2 base candles and then a drop candle. And this is the 75 minutes high liquidity zone suggested by our software. And this zone we fine tuned with 15 minutes time frame. In the recent price action, you have 2 15-minute zones, and here you didn't have any valid zone because here the valid zone is stopped out already. But in the recent price action, we have 2 zones. Here you have a rally candle, 3 base candles and a drop candle. This is a 1 15-minute zone, and you have another 15-minute zone. You have a rally candle, you have a base candle, and then again you have a drop candle. This is another 15 minutes valid zone. And both these zones are fine tuned with 5 minutes time frame. And then I have found 3 5 minutes fine tuned zones here. Let me go to the 5 minutes time frame. See, here you have a drop candle. You have 1 2 3 base candles, and again a drop candle, and then follow through candles. So this is one fine-tuned 5-minute zone, and we want to plan a trade in this zone. In case if this is stopped out, the one above. Even if this is stopped out, the one above. But again, the second one, how I fine-tuned. See here at the distal line. Look into this zone. You have a drop candle, you have 3 base candle, then you have a drop and follow through candles. This is the fine-tuned 5-minute zone, but where this fine-tuned zone is placed? At the distal line of the 15 minutes zone. This entire thing is 15-minute zone. The fine-tuned 15-minute zone is originated from this 5-minute zone. What is this concept? A lower time frame as an horizon to the higher time frame. Many times such kind of zones will be having a very strong order flow. That is what you learned in lesson 22. Lesson 22 is a new concept I developed. And the name of the strategy I have given, a lower time frame as an horizon to the higher time frame zone. Because the higher time frame zone picked up the orders from the lower time frame zone, and then the zone was created. That means the lower time frame zone is having a very strong order flow. Then only such kind of a price pattern will happen. That is what happened. This 15-minute zone, see here in this candle, it picked up the orders and then this zone was created. But earlier, before this 15-minute zone was created, there was a 5-minute zone. From this 5-minute zone, the orders are picked up. So we have a drop, base, drop. See, already once it picked up the orders from this zone. The follow-through candle, again it picked up the order and the candle is formed. And then see the push. This itself is the first indication there is a strong order flow because of this rejection, and then continuation to the rejection, prices went down. And see here second, this is again a huge rejection and again follow through candles, and prices were pushed down. At that time this 15-minute zone was created, and the horizon for this 15 minutes is 5-minute zone. Such kind of zones will be having a strong order flow. Exactly, that is what happened today. Today, this fine-tuned 5-minute zone is violated. See here, this is the morning 9:15 candle, 5 minutes candle. After that, it picked up the orders, and then see how the prices came down and finally reached the 15 minutes target. And if you look into the 1-minute candle, you will get better clarity. See, this is today's first 1-minute candle. The prices were opened down and then moved up, and this zone is violated, and again came down and again pushed and further pushed in the next candle. This is the 9:16 candle, and we got the trade from this zone, because this entire zone from here to till the top, this is the 5-minute zone, that is the horizon for this entire 15-minute zone, because 15-minute zone is started a little below the 5-minute zone. See here, it picked up the orders from this 5-minute zone. The one above is 5-minute zone. And here 15-minute zone is started. Here this entire 15-minute zone is started here. It picked up the orders. And today also the prices went up to here and picked up the orders. At 9:16 candle we got the trade. If even 9:17 candle also it gave, and then again it pushed and finally reached the 15 minutes target zone. And most of you people, I am sure the stopped out trade might not have happened, because it is in the 9:15 candle itself everything happened. I know many of you, your trades might be missed out during 9:15 candle. But if any of your trade is executed, you have to accept this stop loss. In the next trade is a successful trade. But I am confident that most of you, I don't know whether any of your 9:15 order is executed or not, but definitely this is a successful trade. The 9:16 and 9:17 candle. And moreover, this is the new concept we developed recently in lesson 22, the lower time frame as an horizon. And also we have seen in the past also many such kind of trades, we got a good successful trades. But here one point you have to observe, when it reached the target, today at 15 hours, that means today 3 o'clock, afternoon 3 o'clock candle, it reached the target. But I am sure the blue color line what I have drawn, many of you might have exited here, because the price was stayed here for a long period. It's not confirming whether it is going up or going down. Definitely many of you might be having some kind of intolerance in our patience. Definitely we would have exited here in the blue color line I have drawn. There are reasons, strong reasons why we exit mostly around this blue color line. Because see here, there are a lot of rejection from this area. Whatever the blue color earlier, before our trade executed, this itself is an indication. Here there some strong institutional order flow is there in this area. A rejection, again a rejection. See here from this candle again a rejection. In this candle also again a rejection started. After that the price has moved up, and finally after 2 o'clock 45 minutes this zone is broken and finally reached the 15 minutes target. Okay, this is the opportunity, maximum opportunity we got from this stock. But the point you should understand our patience levels also, human psychology also. You may not be having confidence that it will reach 15 minutes target zone because it reached almost at the end of the day. If you are doing cash trading, probably by 2:45 you have to close your trade. That kind of fear will be there in your mind. If that is the case, somewhere here at 12 o'clock or between 12 o'clock and 12:30 or 12:40, we would have exited here. Many of you people, I am sure about it. But those who took the futures and having a lot of patience and you are waiting and waiting and waiting and waiting, finally it reached our target at 3 o'clock 5 minutes candle or 3 o'clock candle. Okay, this is the maximum opportunity from here to here. But from this opportunity, how much you captured is depending on our human psychology. Because here we have a 15 minutes zone is there. Okay, this is about, so that means technically we have, even though many of your 9:15 candle trade might not have executed on this zone, but still we need to count this as it hit the stop loss. Because the trade is failed, whatever our software is suggested, one fine-tuned zone is violated. So obviously you need to exit from the trade. But the next one is a successful trade, that is a different story. So that's why I have registered both in our Excel sheet. The LT of the one that is stopped out at 9:15 candle, it has given 1,651 rupees loss as per one futures margin cost, which is 1% negative return, 1% ROI, minus 1% ROI it has given. So it is within our stop limited, because maximum 2% we will accept as per the risk management. It doesn't mean everybody should accept 2%. Some can't take that much risk. Maybe they will be limited to only 1.5 or 1.2 or 1%. It's all depend. But at least 1% stop loss it has given. So we have to accept this trade. Whoever is accepted 1% level, this is a stop loss. Whether your trade is executed at 9:15 or not, it is irrelevant. But it is stopped out. So I have registered this. The next one is the one at the distal line of this zone. We have one more fine-tuned zone, that is a 5-minute zone, is the horizon for 15. This is a very powerful. Several times I told you, lesson 22 is a new concept. This is as per my observation when I was developing this software. Finally, I realized these 5-minute zone responsible for the creation of higher time frame. That means higher time frames pick up the orders from this lower time frame zone, and their zones will be created from here. Such kind of zones I observed, the order flow is very strong. They are almost, these zones work like high liquidity zones. Many times they are giving very good profits. See, today also it has given excellent. How much ROI it has given? 7.1% ROI it has given till the 15-minute zone. Maybe you might have exited at this blue color line, but it has given you that opportunity. So that is what I am registering in this Excel sheet. Whatever the maximum opportunity it has given. Maybe from this opportunity, some of you might have got only 7,000 rupees profit or 8,000 rupees profit. Some of you 9,000 rupees. It's all depending on where you exited from your trade. But this is the maximum opportunity it has given, and the maximum ROI it has given is 7.1%. So this is about LTF. The next one more stock also we got, that is Ramco Cement. That is also the same concept. Lower time frame as an horizon to the higher time frame. Ramco Cement also the same concept is executed. So let me go to the Ramco Cement. This is a daily high liquidity zone. Daily high liquidity supply zone. So I am going to the daily time frame. In the Ramco Cement, we have a rally candle, 2 base candles and a drop candle. This is what our software identified this zone. And this daily zone we fine-tuned with 75 minutes time frame. So here I found a 75-minute zone. We have a drop candle, 1, 2, 3, 4 base candles, and again a drop candle. This is the 75-minute zone. You may ask a question, this is a rally, 2 base candles and a drop, but this is not a valid leg out candle. And moreover, this candle is also ERC candle. So that's why it's not a valid zone. So I didn't draw any zone. So that's why it's not valid according to me. So this is valid, drop base drop, 75 minutes. Inside the 75 minutes, I have drawn the 15-minute zone. We have a very clear 15-minute zone here. That's a high liquidity zone, the 50-minute zone, because it was supported multi-testing. We have a rally, we have 1, 2, 3, 4 base candles, and again a drop candle, ERC candle. But have you noticed I have drawn a zone before this? So this is the 5-minute zone, overlapped at the distal line, and this 5-minute zone was created earlier. Now, at the time of this 15 minutes, fine-tuned 15-minute zone creation, it picked up the orders from this 5-minute zone and this zone was created. That's why this is the area we have a very strong order flow. Let me go to the 5 minutes and I will show you. See here, we have a drop candle, you have 1, 2, 3, 4, 5 base candles, and again a drop candle. See, this 5-minute zone is overlapped with this newly created 15-minute zone. Newly means this one is created first. After that, this 15-minute zone was created. How it created? Picked up the orders from this zone. See here in this candle, how it picked up the orders, and then after that, this entire 15-minute zone was created. And here also, again it picked up the order second time. First time and second time. Multiple times it picked up the order, and finally this entire 15-minute zone was created. With this, after that, there is a huge leg out, the 15 minutes time frame. And multiple times already it picked up the orders from here. See, earlier, forget about 15-minute zone. This zone is tested here, again tested here, and after that several opportunities it has given. Let me show you. Again it picked up the orders, and see the push, where this is the origin for this entire 15-minute zone. Again picked up the orders and came down. And see here, again it picked up the orders from this fine-tuned 5-minute zone, and again came down. So it is working. It is also, this is not only origin to the 15-minute zone, this is also a high liquidity zone. Generally such kind of 5-minute zones, which is origin to the 15-minute zone, mostly they will act as a high liquidity zone. That's why it is supporting. Even today, it's not today. This is on 23rd August. Again it picked up the order. See the push, how it moved down. And now today, see today at 1 o'clock, 1 o'clock 55 minutes candle, 5 minutes candle. Again it gave a trade. But this is the first time this entire 5-minute zone is slightly pierced. That means this zone we can't use no more in the coming days. But today already we placed an order here. After that the zone is pierced, but it is within our stop buffer. See the blue color line, what I have drawn, that is 840, 15 paisa. 840, 15 paisa is the stop buffer. And up to what price it went? The high of the candle, 840.05 paisa. Still 10 paisa more is there. Otherwise, if suppose if the another 15 paisa it moved up, our stop loss would have been executed. But our stop loss is not executed. We are within the stop buffer. This is another example how stop buffers are saving our trades. Even couple of trades you have seen during this month. Couple of trades, they protected, a stop buffer protected our trades. Only one trade is stopped out. It went a little above the stop buffer and after that came down. But that trade we treated as a stopped out trade. Once the price goes beyond the stop buffer, we will consider that as a stopped out trade. As long as price does not go, it is not a stopped out trade. So that's why it's a successful trade today. We took an entry here. But even though the zone is pierced, still it is within the stop buffer. Today's trade is saved because this is already pierced. This zone is fine. This 5-minute zone is this 5-minute zone is pierced. So no more this 5-minute zone is valid in future, in the coming days. But today already before stopped out, before pierced, it's not stopped out. Before pierced, we took the trade. The zone is pierced. We took the trade. But stop buffer saved our trade. And after that, finally, it reached the 15-minute supply zone. That came very close. Generally, we exit some few paisa before. So somewhere here, we would have exited. So this is the 15 minutes target zone. See here, we have a rally, base, rally. This is not only got our order, but also it created a new target zone. Earlier, maybe you would have kept your target somewhere here in this candle, rally, base, rally. Now, because again a new 15-minute zone is created, we have adjusted it. Came almost close to this, maybe few paisa before. But that is okay. It is a successfully reached the target. And moreover, it is a 1:3.6 RR this zone is having. Till the stop buffer, till your entry point. Suppose if you would have taken exactly at this proximal line, maybe if you would have kept a little buffer before this, still you would have got 1:3.5 RR. So it's a very good RR. This zone is having a very good RR, and finally, it has given you a profit 6,587 rupees, which is 5.1% ROI as per one future margin cost. So these are the two successful trades, and we already discussed. Next one is Bosch. This is a 75 minutes high liquidity demand zone. See, rally, base, rally. And today we didn't get a trade today. This is the morning. From here it moved up. The prices did not enter into the fine-tuned area. So here we have two fine-tuned zones. Let us check what it is. First, let me go to the 15 minutes time frame. 15 minutes time frame, we have a rally, base, rally. But here there is no fine-tuned 15. But still, why I drawn this zone, I will explain. Rally, base, rally. There is no fine-tuned 15-minute zone. Still, I have drawn a 5-minute zone. Maybe it is an aggressive trade setup. That is why I have drawn. Why I have drawn, I will explain. Okay, now let's go to the 5 minutes time frame. In the 5 minutes time frame, this one ERC candle I consider as a leg-in, and then 3 base candles and a rally candle and follow through candles. This is the way I have drawn the fine tune. Here we can try once, and here still there is no, we have a drop, rally, drop, base and rally. This is the type 2 proximal. Why I have drawn and considering this as an aggressive trade, the reason is, see how there are rejections from this zone. It touched and see how it moved up. The candle is opened here, just touched this zone and see how it moved. Next candle again, it opened here, came down, just touched this zone and see the rejection. After that, the entire move is started. It's a very big move. That means the order flow in this area is very, very strong. So this can be an aggressive trade based on the price rejections away from the zone. Type 2 proximal entry. What is the entry here? The open of this candle 31,250. What is the low of this candle? 31,270. Low 31,251.05, just a little above. Here low of the candle, 31,000 exactly 250. So in this zone we have a very strong order flow. Definitely there is nothing wrong in planning a trade in this zone based on these price action clue rejections. Rejections are very powerful. Many times they give success. Maybe once in a while such kind of analysis will fail. I am not saying every time it will work. Rarely it will fail. But many times you will get successful trades from this such kind of zones. That's why observing the price action clues are very, very important. But anyway, today we didn't get a trade opportunity in this zone. But while analyzing the zones, this is how you need to fine tune your zones. These are the learnings for you people. Who knows, in the coming days again, you may get an opportunity, prices. That day, this whatever the analysis we did, that will be helping you for taking your trades. And next one, last one is Bata India. Somehow I am not comfortable with this fine tuning this zone. Still I found some trade opportunities, but I am not happy with those opportunities. What I will explain, some learning you are having here. And first of all, this is a 75 minutes high liquidity supply zone. You have a rally candle, base candle. This is a medium size leg candle. This is how software identified medium size. This is another medium size leg candle, and then a drop candle. So rally, base, drop. You know that if there is a base candle, after that you can add medium size leg candles before the leg out. Before the leg out. So rally, 3 base candles, drop. This is how our software identified. See, whatever the concept, based on that only software is designed. Because some of you might be thinking all should be base candles, there should not be any medium size leg candle or drop candle, you may say. If the drop candle is explosive, it should not be there inside the zone. I agree with that. But the drop candle is a medium size candle, and it is allowed to keep inside the zone if there is an earlier base candle. Suppose if this base candle is not there, this is not a valid zone. Because this base candle is there, it is a valid zone. These are the exceptions from your theory. Existing main theory, these concepts won't be explained. Nobody will explain these concepts. But these are the practical concepts. These concepts work very well. That's why many of the zones software generated, you will see such kind of scenarios. And we get several successful trades. Why we didn't explain in the core concept is because if I start explaining every exceptional scenario, you will get confusion. First, you should become master in the existing theory. Once you become a master in the existing theory, then all the exceptional scenarios you will be learning slowly, one by one, over a period of time. This is what experience. How we learned all these concepts based on our experience. Observed several scenarios in the past. And finally, we realized such kind of concepts are allowed. They work very well. Same thing is also happening to you now. Now you are learning because now you already completed your phase 1, phase 2 training program. You learned the concepts. Now you have to start learning these exceptional scenarios. But you should not argue that in the core concept I didn't learn. Now how can you keep a medium size leg candle as part of the base? That is the earlier concepts you learned is a theory. But these are the practicals. Practicals over a period of time you will experience. For the past 6 months, how many such kind of zones we have seen? Several zones. Our software is always identifying several zones. Why software is identifying? Because I programmed the software accordingly. Because these exceptional scenarios, software will identify much easier than human identifies. Because the rules are clearly defined in the software. Okay, fine. This 75-minute zone is fine-tuned with 15-minute zone. Here you have a 15-minute zone. This is a ERC candle again. That is the way I considered 1, 2, 3, 4 base candles. And then drop candle. You add the hidden body. The moment you add the hidden body, this will be explosive candle. Some more body you will get. But here there is no fine-tuned proper 5-minute zone. I am not happy with the 5-minute zone here. so many base candles, 1 2 3 4 5 6 7. If you consider this as a leg-in candle, ERC candle, you have several base candles are there, then drop candle. But it is already tested once. It worked. Maybe some 1 minute zones might be there which could be very strong, might have worked as an aggressive trade. There are reasons why. See here, the prices before getting into this zone again came down. Maybe some order flow might be there. But anyway, but we are limiting our analysis up to the 5 minutes. Unless there are strong price action clues, we look into the 1 minute zone. Strong rejections are there, then we look into the 1 minute zone. But fine tuning we will limit to only 5 minutes time frame. So, but have you noticed, see here, from here there is a rejection, again from here there is a rejection, even today from here, exactly from here, again there is a rejection. Go to the 1 minute time frame. Definitely you will find some clues here. So you have a drop, 1 2 3 base candles, and again a drop candle. Drop, base, drop, you can't consider really, because this is again moving. This is a failed ERC candle. Sometimes you may consider that is okay, but gap is, at least a minimum body should be there to acceptable. But this is a perfect. Probably here in this 1 minute zone there is a strong order flow. So before going to this 1 minute there is a rejection, first indication. Now again it touched the 1 minute and huge rejection from here. You go to the 5 minutes, you will get clarity. Rejections can be seen much better when you move on to the higher time frames. 15 minutes also you can see even better rejections. And moreover, there is a pro gap is also there from here. In the 5 minutes time frame you can see a pro gap. Before pro gap, a small pro gap. Let me draw a horizontal line here. So it touched the 1 minute and came down. And today you see here again came very close. It didn't touch, but if anybody would have added some stop buffer, some entry buffer, your trade would have been executed. It could have been a 1 minute aggressive trade based on the concept of price rejections. But anyway, I am not really considered this trade. The reason is going at 1 minute level and observing outside the zones is very it's not really convenient every time. It's not really convenient. Okay, this is the first trade really went inside. This also you can consider as a trade. Maybe next time maybe one can plan a trade from this zone once prices enter. Because already 2 times we have seen rejections almost exactly near to the zone, very near. At least here, this is also near, a little far compared to this one and this one. This is the first price action clue. There is no doubt in that. So exactly from here it picked up the orders, just a little below. But anyway, I didn't consider this analysis as part of today for the trading purpose. If anybody considered and took a trade, okay, fine, it's good. It could be a good trade for you. But we have other 2 successful trades, especially from the powerful concept, lower time frame as a zone to the higher time frame. That way you can understand. But anyway, Bata India, as per my analysis, this zone should be stopped out. But because there is a strong order flow at 1 minute level, until it breaks, probably this zone may not be stopped out. The reason is inside there is no proper 5 minute structure inside this zone. So this is about the high liquidity zones we found in the previous session. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.